Breaking commentary this week has focused on renewed scrutiny of the Sussexes' philanthropic work, particularly the Archewell Foundation, rebranded Archewell Philanthropies in late 2025, with critics alleging financial opacity and limited charitable impact relative to the couple's high-profile media deals. Some online commentary has gone further, claiming the organization's structure has drawn federal attention and describing it in highly charged terms as a scam. Prince Harry has long framed the 2020 departure from senior royal duties as a search for freedom, privacy, and the ability to do meaningful good outside institutional constraints. Critics now argue that those stated motives sit uneasily alongside the foundation's financial record. They point to Delaware incorporation, common for many American nonprofits and companies, because the state offers flexible corporate law and does not require public disclosure of beneficial owners, as creating layers of entities and accounts that reduce transparency. Claims circulating online of 13 separate bank accounts linked to Archewell and its affiliates have not been independently verified by mainstream reporting, nor has any confirmed IRS criminal investigation into the foundation been established. Publicly available IRS Form 990 filings do show that in its early years Archewell's direct charitable grant-making was modest relative to revenue. In 2021, for example, the foundation reported roughly $3 million in revenue while distributing less than $150,000 in grants, around 5%. Well below the 70 to 85% program spending range often cited as a benchmark for established nonprofits. Later filings show higher absolute grant totals in some years, but 2024 figures recorded approximately $2.6 million in total revenue against $5.1 million in expenses and about $1.25 million in grants, producing a significant deficit. The organization has also faced criticism from charity watchdogs over delayed or incomplete provision of audited financial statements and a brief, delinquent listing with the California Attorney General's registry that was subsequently corrected. Supporters note that new high-profile foundations frequently incur elevated administrative and startup costs, and that Archewell has made grants in areas such as mental health, online safety, and community resilience. Detractors counter that an entity backed by multi-million-dollar media partnerships and attached to two of the world's most recognizable figures should demonstrate clearer, higher proportional impact. The foundation's rebranding to a fiscal sponsor model and reported staff reductions have further fueled debate about its long-term direction and sustainability. In documented fact, as of August 2026, Archewell Philanthropies remains a registered 501c3 organization that continues to file public tax returns. No criminal charges or formal IRS finding of fraud against the foundation or its founders have been confirmed by official sources. The couple themselves are in the process of relocating privately to Britain with their children while retaining properties in California. The foundation's financial performance and transparency continue to attract critical scrutiny, but the more dramatic allegations of a federal investigation and systematic scam architecture remain unverified. Before Spotify publicly ended the partnership, with a senior executive later describing the arrangement in highly critical terms, and alongside a publishing deal with Penguin Random House that reportedly paid Harry a substantial advance for his memoir Spare, critics have pointed to a stark contrast. While the couple's media ventures generated significant personal income, the charitable arm of their operation distributed a relatively small percentage of its early revenue to direct causes. In its first full years, publicly filed Form 990 showed grant-making well below the levels typically expected of established nonprofits. This disparity has prompted persistent questions about where funds were directed. Some online commentary now alleges that the answer may lie in a network of Delaware-registered entities. Delaware is a common jurisdiction for American corporations and nonprofits because its corporate law offers flexibility and does not require public disclosure of beneficial owners. Critics claim that 13 separate bank accounts linked to Archewell and related entities exhibit patterns of rapid inter-account transfers that forensic accountants sometimes describe as layering, a technique associated with obscuring the origin and destination of funds. These claims rest on documents said to have surfaced online and to form part of a preliminary IRS inquiry. No such formal investigation has been confirmed by official sources, and the documents themselves have not been independently authenticated by mainstream reporting. It is important to be precise. Allegations are not findings of fact, and an inquiry, if one exists, is not a determination of wrongdoing. Prince Harry and Meghan Markle are entitled to the presumption of innocence. Nevertheless, the public optics are damaging. The timeline cited by critics runs roughly as follows. Archewell was incorporated in 2020. Over the following period, multiple related entities appeared. Revenue from major media contracts flowed in. Direct charitable output remained modest relative to income. Administrative, salary, and consulting costs rose, and, according to the same unverified accounts, certain entities later filed amended returns. Amended returns can indicate corrections of earlier errors, but critics interpret them as evidence that original figures required revision. Stepping back from the financial claims, attention turns to the public contradictions surrounding Harry himself. He has repeatedly emphasized authenticity and the need to speak his truth. He told Oprah Winfrey that the couple had been financially cut off by the royal family and told other interviewers that commercial deals were a necessity rather than a luxury. At the same time, reports have circulated, neither confirmed nor denied by Harry, that limited private financial support from the Duchy of Cornwall continued for a period. He has spoken of a desire for privacy while signing a multi-part Netflix series that brought cameras into the family home and aired personal grievances to a global audience. He has pursued legal action against British tabloids over privacy while granting extensive access to selected American media outlets. He has cited mental health protection as a reason for stepping back from royal duties, yet subsequently engaged in a sustained media campaign that generated far more intensive public scrutiny than he experienced as a working royal. In documented fact, Archewell, now operating as Archewell Philanthropies, remains a registered 501c3 organization that continues to file public tax returns. Early year grant ratios were low relative to revenue. 2024 filings showed higher expenses than income and continued scrutiny over transparency. No criminal charges, confirmed IRS finding of fraud, or verified evidence of money laundering activity have been established by official sources. The couple are in the process of relocating privately to Britain with their children. The financial performance and governance of their philanthropic vehicle continue to attract critical examination, but the more dramatic allegations of a formal federal investigation and systematic layering remain unverified. By any objective measure, the Duke of Sussex has repeatedly undermined his own position, not through external hostility alone, but through a series of choices that critics describe as self-sabotaging. The observation is offered less with malice than with the weary recognition of watching someone dismantle the very supports that once sustained them. If a formal IRS audit of Archewell, now Archewell Philanthropies, were to proceed, the potential consequences would extend beyond ordinary financial penalties. Loss of tax-exempt status could trigger retroactive taxation on revenue previously sheltered under nonprofit rules, creating liabilities that some estimates place in the tens of millions of dollars. Should investigators ever establish deliberate misrepresentation, a large and unproven if the matter could move into criminal territory, where federal tax fraud carries statutory penalties of up to 5 years imprisonment and substantial fines per count. No such determination has been made. The American justice system has historically shown considerable latitude toward wealthy and well-connected defendants, and nothing currently indicates that criminal charges against Prince Harry or Meghan Markle are imminent or even under active consideration. The mere existence of sustained public questions about the Foundation's finances, however, is itself damaging. Beyond any legal risk lies reputational exposure. Harry's public brand has been constructed around moral authority, the royal who walked away from privilege to stand with the marginalized and to speak uncomfortable truths. That positioning is now confronting a challenge that cannot be managed solely through carefully staged interviews or additional memoirs. An audit, if one were opened, would turn on numbers rather than narrative. 13 Delaware bank accounts, an allegation circulating in online commentary, but not independently verified by mainstream reporting, are cited by critics as evidence that the figures do not readily reconcile. The wider Sussex story has always been a contest over narrative control, who tells the story and who is believed. For several years, the couple maintained a firm grip on that narrative, using celebrity, platform, and public appetite for royal drama to present themselves as principled outsiders and the institution they left as the source of harm. Narratives, like financial accounts, eventually face external examination. When auditors, whether holding clipboards or legal process, arrive, the story ceases to belong exclusively to its authors and begins to belong to the evidence. The picture drawn by the most critical accounts looks like this. A British prince born into one of the world's most scrutinized institutions relocates to California, establishes a charitable vehicle in a jurisdiction known for corporate privacy, operates through multiple related entities, channels substantial media revenue through those structures, and in its early years distributes a comparatively small percentage of proceeds to direct charitable causes while recording significant administrative, consulting, and brand development costs. Early Form 990 filings did show grant ratios well below typical nonprofit benchmarks. Later years continued to attract scrutiny over the balance between expenditure and program spending. Critics argue the overall pattern resembles a commercial enterprise more than a pure public benefit organization. The IRS, an agency not known for susceptibility to celebrity, is said by some online sources to have taken notice. No formal finding of fraud or money laundering has been issued. Defenders of the couple routinely characterize such scrutiny as the latest round of British press hostility, bullying, or racism. Those historical grievances are real and well documented. They do not, however, render questions about financial transparency illegitimate. Asking for clear accounting of a tax-exempt organization's revenue and disbursements is a separate matter from personal or racial animus. In documented fact, Archewell Philanthropies remains a registered 501c3 that continues to file public tax returns. Early year grant-making was modest relative to revenue. 2024 filings recorded higher expenses than income. Delaware incorporation is commonplace and not inherently improper. No confirmed IRS criminal investigation, loss of tax-exempt status, or verified evidence of systematic layering has been established by official sources. The couple are in the process of returning privately to Britain with their children. The Foundation's financial performance and governance continue to draw critical examination, but the more dramatic claims of an active federal probe and imminent catastrophic liability remain unverified. Critics argue that the financial architecture surrounding the Sussexes' philanthropic and commercial activities is, by available indications, largely Harry's domain rather than Meghan's alone. It was Harry who brought the residual royal connections, the institutional name recognition, the Commonwealth associations, and the residual credibility that made the Archewell brand commercially viable. His title and lineage opened doors at Netflix, Spotify, and Penguin Random House. Without that residual royal association, Archewell would function as one more celebrity foundation. With it, the enterprise carries an implicit proximity to a millennium of British monarchy, whether or not the palace endorses the connection. That proximity, the argument continues, makes the Delaware structure especially sensitive. Even a self-exiled member of the royal family operates under a heightened expectation of public trust. British taxpayers funded Harry's upbringing, education, military service, and security for decades through the sovereign grant and the Duchy of Cornwall. When he stepped away from official duties, he was fully entitled to do so. What critics dispute is the subsequent monetization of institutional credibility through American media contracts, the channeling of proceeds through Delaware entities, and the simultaneous claim that the resulting vehicle deserves full tax-exempt status as a public charity. They characterize the arrangement as arbitrage rather than service, an approach the IRS maintains specialized units to examine. Attention has focused on documents said to have surfaced online and to detail the internal financial structure of Archewell and related entities with unusual granularity. The document's provenance remains unverified. They could originate from a former employee, a whistleblower, or another source. According to those circulating claims, the multiple Delaware accounts are not organized by discrete program areas, veterans, mental health, environment, and so on. Instead, they are said to move funds in circular patterns, media revenue deposited in one entity, transferred as a consulting fee to a second, recharacterized as a licensing payment to a third. And only after successive transfers does a reduced sum appear in an account earmarked for charitable grants. The larger residual is absorbed by administrative costs, executive compensation, and strategic brand partnerships. Forensic accountants familiar with such patterns have described them as deliberately opaque. Observers note structural similarities to earlier American nonprofit controversies, including the Trump Foundation, dissolved after New York authorities found self-dealing and misuse of funds, and various celebrity or political charities later criticized for treating tax-exempt status as a personal vehicle. The familiar sequence, critics say, is a noble-sounding mission, high-profile revenue, successive inter-entity transfers that obscure the ultimate destination of funds, and limited proportional spending on the stated charitable purposes. In documented fact, Archewell, rebranded Archewell Philanthropies, remains a registered 501c3 organization that continues to file public IRS Form 990 returns. Earlier filings showed grant ratios well below typical nonprofit benchmarks. Later years continued to attract scrutiny over the balance between expenditure and program spending, culminating in a 2024 deficit. Delaware incorporation is commonplace among American nonprofits and corporations and is not inherently improper. No authenticated set of internal documents detailing 13 bank accounts or systematic layering has been published by credible investigative outlets, and no formal IRS finding of fraud or loss of tax-exempt status has been confirmed. The couple are in the process of returning privately to Britain with their children. Questions about the Foundation's financial transparency and grant-making efficiency remain legitimate subjects of public discussion. The more dramatic claims of an active federal criminal investigation and proven money laundering architecture remain unverified. Critics describe a familiar pattern in American nonprofit practice: pay principals and administrators generously through overhead channels while distributing just enough to actual causes to preserve the appearance of legitimacy. They argue that Prince Harry, who left Britain citing the constraints and perceived corruption of institutional power, has adopted this model with notable enthusiasm. The irony is not lost on them. Harry's memoir Spare was marketed as an exercise in radical honesty, a prince confronting trauma, family, and the past without flinching. It sold more than 5 million copies in its first week and generated substantial personal wealth. Yet for all its claimed candor, the book is silent on Archewell's finances. There is no discussion of Delaware incorporation, no explanation of why a charitable vehicle would require multiple bank accounts, and no acknowledgement of the gap between the organization's stated mission and its early grant-making ratios. In nonprofit governance, critics note, the money is the central issue. The memoir is frank about almost everything except that. The harsher assessment is that Archewell, as currently structured, functions less as a pure public charity and more as a brand management vehicle that carries a charitable tax designation. Its initiatives, partnerships, and photographed community visits are said to generate content, sustain relevance, and underwrite the media contracts that support the Montecito lifestyle. Actual grants have been made to real causes, but they are characterized as secondary to the primary work of self-promotion. Early Form 990 filings showed grant ratios well below typical nonprofit benchmarks. Later years continued to attract scrutiny over the balance between expenditure and program spending. Commentary circulating online claims that any IRS attention is focused on 3 areas: whether tax-exempt status was properly obtained and maintained given the ratio of charitable spending to overhead, whether multiple Delaware accounts were used to route commercial revenue through nonprofit channels in ways that improperly reduce taxable income, and whether inter-entity transfers amount to self-dealing, the use of a charity's resources to benefit the individuals who control it. Self-dealing is a serious breach of American nonprofit law and can trigger excise taxes, loss of tax-exempt status, or, in extreme cases, criminal referral. No formal finding on any of these points has been issued by the IRS. Harry is well-resourced with lawyers, accountants, and public relations support. He also retains the residual status of a prince of the United Kingdom. The prospect of a federal prosecutor pursuing criminal charges against a member of the British royal family is widely regarded as remote. Critics argue, however, that the more immediate issue is public credibility. The Spotify partnership ended amid publicly reported internal criticism that labeled the couple unproductive. The Netflix arrangement remains technically active, but has delivered less content than originally anticipated, and audience interest has declined after the initial surge. Spare, despite its explosive launch, has largely left the cultural conversation. The philanthropic vehicle once presented as the moral justification for the entire enterprise is now the subject of sustained financial scrutiny. The more reflective critique is that none of this was inevitable. Harry could have left royal life, established a modest and transparent foundation focused on veterans' welfare, mental health, or other causes he has long championed, and used his platform without the elaborate commercial and corporate superstructure that has invited so much skepticism. Instead, the combination of high-value media deals, relatively modest early charitable output, and complex Delaware entities has left the enterprise open to the charge that self-promotion took precedence over public benefit. In documented fact, Archewell Philanthropies remains a registered 501c3 organization that continues to file public tax returns. Early year grant ratios were low, 2024 filings recorded a deficit, and continued questions about transparency. Delaware incorporation is commonplace and not inherently improper. No confirmed IRS criminal investigation, finding of self-dealing, or loss of tax-exempt status has been established by official sources. The couple are in the process of returning privately to Britain with their children. Legitimate questions about the foundation's financial efficiency and governance persist. The more dramatic claims of an active federal probe and systematic fraud remain unverified. Harry could have left the institution and continued to support the causes he cares about without converting every act of service into content and every content opportunity into a revenue stream. He could have demonstrated that it is possible to step away from royal life without monetizing its residual prestige. Instead, critics argue, he adopted a more complex Delaware-based structure characterized by multiple accounts, successive interentity transfers, relatively modest early grant-making, and substantial administrative extraction. The same pattern seen in a series of earlier celebrity charity controversies. The practical and reputational bill for that choice is now coming due. The central question on this reading is no longer whether the broader Sussex commercial enterprise can continue at its previous scale, but whether Harry will confront the resulting wreckage directly, without ghostwriters, without public relations filters, and without the reflex of attributing every difficulty to external hostility. Skeptics suspect the answer is already visible. Whistleblowers, the argument continues, do not typically emerge from organizations that are functioning cleanly and transparently. They risk careers and reputations when the gap between an organization's stated mission and its actual financial behavior becomes too wide to ignore. When the dissonance of discussing service to marginalized communities, while large sums move through multiple opaque accounts, becomes intolerable. Whoever may have released internal material, if such material is genuine, is said to have performed a service that the Foundation's public rhetoric of service has not matched. The claimed mechanics are presented as follows. 13 bank accounts, all registered in Delaware and linked to Archewell or related entities, form a nested corporate structure that, according to circulating online documents, moves funds in circular patterns. Media revenue enters one entity, is recharacterized as a consulting or licensing fee in another, and only after successive transfers does a reduced sum appear in an account designated for charitable grants. The larger residual is absorbed by administrative costs, executive compensation, and brand-related expenditure. These documents remain unverified by independent mainstream investigation. American nonprofit law under Section 501c3 creates a clear bargain. The government forgoes tax on the organization's revenue in exchange for the organization spending the great majority of that revenue on public benefit activities, filing detailed annual returns, and strictly avoiding private inurement. The use of charitable resources for the personal benefit of those who control the organization. Violation of the private inurement rule can lead to loss of tax-exempt status, excise taxes, civil penalties, and, in extreme cases, criminal referral. Critics allege that the Delaware architecture was structured to test the outer limits of this prohibition by reclassifying commercial revenue as charitable income and personal or promotional expenditure as legitimate administrative overhead. No formal IRS finding on any of these points has been issued. In documented fact, Archewell, rebranded Archewell Philanthropies, remains a registered 501c3 that continues to file public Form 990 returns. Early year grant ratios were low relative to revenue. 2024 filings showed higher expenses than income and a deficit. The organization has faced criticism over transparency, experienced staff reductions, and shifted toward a fiscal sponsor model. Delaware incorporation is commonplace and not inherently improper. No authenticated set of internal documents detailing 13 accounts or systematic layering has been published by credible outlets, and no confirmed IRS criminal investigation or finding of private inurement has been established. The couple are in the process of returning privately to Britain with their children. Legitimate questions about the foundation's financial efficiency and governance remain open. The more dramatic claims of an active federal probe and deliberate fraud architecture remain unverified. Critics describe the structure as a system engineered to appear compliant while functioning, in practice, as a mechanism for personal and brand-related extraction. Interorganizational transfers are characterized as operational efficiency. Substantial administrative, consulting, and brand development costs are recorded as legitimate overhead. The IRS has dismantled similar arrangements in the past when the evidence justified action. Whether the evidence in this case reaches that threshold remains an open question. On the basis of material that has circulated online, some commentators answer with a confident yes. No formal finding has been issued. Numbers without context can be misleading, and the Sussex public relations effort has generated a great deal of noise. Precise cumulative revenue is difficult to isolate because public filings do not always present a single consolidated picture. Between major media contracts, Netflix, Spotify, book advances, speaking fees, corporate partnerships, and individual donations, total inflows over several years have been substantial, almost certainly reaching into the tens of millions of dollars and, on some estimates, higher. Direct, verifiable charitable grants, by contrast, have represented a markedly smaller share of that total in the Foundation's early years. Public Form 990s showed grant ratios well below the 70 to 85% range often cited as a healthy benchmark for established nonprofits. Later filings continued to attract criticism over the balance between expenditure and program spending. Critics therefore argue that a donor giving £100 in the belief it would support veterans or mental health work saw only a small fraction reach those causes, while the larger residual supported the wider brand management apparatus. The individual whose name, face, and residual royal title underwrite the enterprise's credibility is Prince Harry. Not Meghan Markle alone, not the board, and not the rotating consultants. Harry is the figure who told the world he was leaving the royal family to escape the constraints and perceived corruption of institutional power, and who then constructed a parallel structure that, according to these critics, operates with less transparency and less external accountability than the monarchy he left. The contradiction is presented as glaring rather than subtle. That many supporters continue to defend him with undiminished intensity is taken as evidence of the power of celebrity loyalty to override ordinary financial scrutiny. On this reading, Harry is not cast as a victim or an embattled truth-teller. He is described as a man born into extraordinary privilege who walked away from a system that had supported him, then used the residual credibility of that system to build a private commercial and philanthropic vehicle. Trauma and grief, the argument continues, have been monetized through books, documentaries, and podcasts, while the foundation that carries his name has distributed a comparatively modest share of its resources to the causes it claims to serve. Circulating claims that the IRS is now examining the arrangement and that multiple Delaware accounts, once intended to remain obscure, are suddenly visible, form part of this narrative. No such formal investigation has been confirmed by official sources. There is an additional irony noted by commentators. Harry left Britain partly because he regarded its institutions of power as insufficiently accountable, only to encounter an American agency, the Internal Revenue Service, that is institutionally indifferent to celebrity, trauma narratives, or carefully managed public images. The IRS's sole concern is whether the figures reported on tax returns correspond to the actual movement of funds. When an organization maintains multiple accounts in a privacy-friendly jurisdiction and records relatively low charitable output relative to revenue, that discrepancy invites scrutiny. In documented fact, Archewell, now Archewell Philanthropies, remains a registered 501c3 organization that continues to file public tax returns. Early year grant ratios were low. 2024 filings showed higher expenses than income and a deficit. Delaware incorporation is commonplace and not inherently improper. No authenticated internal documents detailing 13 bank accounts or systematic layering have been published by credible investigative outlets, and no confirmed IRS criminal investigation, finding of private inurement, or loss of tax-exempt status has been established. The couple are in the process of returning privately to Britain with their children. Legitimate questions about the Foundation's financial efficiency, transparency, and governance remain open. The more dramatic claims of an active federal probe and deliberate fraud architecture remain unverified. When the numbers fail to reconcile, when reported charitable output falls far short of the revenue flowing through a complex corporate structure, the consequences can be serious. Critics argue that this is the point at which the carefully sustained Sussex narrative finally meets a force it cannot spin, charm, or intimidate: the routine scrutiny of American tax authorities. The collision, they predict, will be unflattering. The next time Prince Harry speaks of service, authenticity, or using his platform for good, these commentators urge listeners to remember the figure that has become a refrain in online discussion: 13. 13 Delaware bank accounts, 13 layers of alleged financial opacity, 13 reasons to ask the question the Sussex public relations effort has spent years trying to keep off the table. If this is a charity, where is the money? The answer, they suspect, will prove more revealing and more damaging than anything contained in Spare. That question, they note, has rarely been posed by the major media outlets that have covered the couple intensively. Netflix filmed kitchens, gardens, children's playrooms, and emotional reflections, but never a balance sheet. Mainstream broadcasters and newspapers have examined trauma, race, family conflict, and security, yet the specific architecture of the philanthropic vehicle has largely escaped sustained forensic attention. The absence of that scrutiny is itself taken as evidence of the effectiveness of the Sussex media strategy, a system designed less to answer difficult questions than to prevent them from being asked in the first place. The architecture of deflection is described as consistent. Questions about finances are met with references to trauma. Observations about modest early grant-making are answered with emotional statements on mental health. When watchdogs note that disbursements have represented a small fraction of revenue, the response is often a staged photograph of community engagement, after which the news cycle moves on. It is characterized as emotional misdirection that has allowed public evaluation to rest more on the photogenic qualities of the founders than on conventional measures of financial performance. American tax authorities, however, are institutionally indifferent to photogenic qualities, childhood trauma, military service, family legacy, or media contracts. They examine whether the figures reported on tax returns correspond to the actual movement of funds. Circulating online material is said to show multiple Delaware accounts engaged in successive interentity transfers. These documents remain unverified by independent mainstream investigation, and no formal IRS finding has been issued. Delaware's role requires brief explanation for audiences unfamiliar with American corporate practice. The state is frequently described as the Switzerland of U.S. corporate law, a jurisdiction that permits the rapid formation of entities with minimal public disclosure of beneficial owners and limited ongoing public reporting requirements. These features are lawful and widely used by legitimate businesses and nonprofits. They also create opportunities for opacity when combined with multiple layered accounts. In documented fact, Archewell, rebranded Archewell Philanthropies, remains a registered 501c3 organization that continues to file public Form 990 returns. Reporting in late 2025 confirmed significant staff reductions, leaving a minimal core team and a shift toward a fiscal sponsor model intended to reduce overhead. Early year grant ratios were low relative to revenue. 2024 filings showed higher expenses than income and a deficit. Delaware incorporation is commonplace and not inherently improper. No authenticated set of internal documents detailing 13 bank accounts or systematic layering has been published by credible outlets, and no confirmed IRS criminal investigation or loss of tax-exempt status has been established. The couple are in the process of returning privately to Britain with their children. Legitimate questions about the Foundation's financial efficiency, transparency, and governance remain open. The more dramatic claims of an active federal probe and imminent catastrophic legal collision remain unverified. Delaware's corporate regime is not a conspiracy theory, it is a publicly documented and legally sanctioned reality. A company can be formed rapidly using a registered agent's address, an address frequently shared by thousands of other entities operating from the same nondescript office building in Wilmington. More than 60% of American corporations, including the large majority of Fortune 500 companies, choose Delaware for incorporation. They do so not for beaches or cultural amenities, but because the state offers minimal public disclosure requirements and strong legal protections. Prince Harry, who left the British establishment citing its institutional opacity as intolerable, has chosen to locate the corporate architecture of his philanthropic vehicle in one of the most privacy-friendly jurisdictions in the United States. The irony is frequently noted by critics. Circulating online material is said to depict the multiple Delaware accounts as active participants in a complex circulation of funds rather than passive repositories. According to these unverified accounts, money enters one entity, is recharacterized as interorganizational consulting fees or brand licensing payments in successive entities, and only after several transfers does a reduced sum appear in an account earmarked for charitable grants. The larger residual is absorbed by salaries, consulting fees, brand development costs, legal retainers, and public relations contracts, overhead that, in a conventional nonprofit, would typically attract close board scrutiny, but which critics argue has functioned as a primary feature of the structure rather than an incidental cost. This is where the critique moves from financial to moral. Ordinary donors who contributed modest sums believing they were supporting veterans' welfare, mental health initiatives, community resilience, or gender equity are said to have been systematically misled. Early public filings showed that direct charitable grants represented a small fraction of revenue, well below the levels expected of established nonprofits. Later years continued to attract criticism over the balance between expenditure and program spending. By way of comparison, even large public institutions with acknowledged bureaucratic inefficiencies routinely direct the overwhelming majority of their budgets to core services. Archewell's early grant ratios, by contrast, left the great majority of inflows supporting the wider administrative and brand apparatus. Despite this disparity, Harry continues to present himself in interviews and published work as a moral authority who left the royal family in order to serve the public more effectively and who condemns institutional lack of transparency. Critics regard the contrast between that public positioning and the limited transparency of his own philanthropic vehicle as a glaring contradiction. Reporting in late 2025 confirmed that the Foundation had reduced its staff substantially down to a minimal core team and had begun operating under a fiscal sponsor model intended to lower overhead. Tax filings for 2024 recorded total expenses of approximately $5.1 million against significantly lower revenue, producing a deficit. Some commentary has linked part of the outflow to high private security costs, though the foundation itself has not publicly itemized such expenditure in that way. In documented fact, Archewell, now Archewell Philanthropies, remains a registered 501c3 organization that continues to file public Form 990 returns. Delaware incorporation is commonplace among American nonprofits and corporations and is not inherently improper. Early year grant ratios were low relative to revenue. Later filings showed continued scrutiny over spending patterns and transparency. No authenticated internal documents detailing 13 bank accounts or systematic layering have been published by credible investigative outlets, and no confirmed IRS criminal investigation or finding of private inurement has been established. The couple are in the process of returning privately to Britain with their children. Legitimate questions about the Foundation's financial efficiency, transparency, and governance remain open. The more dramatic claims of an active federal probe and deliberate fraud architecture remain unverified. The pattern, critics argue, raises a deeper question about self-awareness. It is not presented as a single contradiction or a momentary lapse, but as a sustained 4-year record of asserting one thing while doing another, with sufficient emotional conviction that large sections of the public have failed to register the gap. Harry has said he wants privacy, yet authorized a documentary that filmed his children and domestic life. He has said he was financially cut off, while reports of continued private support for security arrangements have circulated. He has said he left to escape media toxicity, yet signed exclusive contracts with some of the world's largest media companies. He has said he wants to serve, yet the philanthropic vehicle bearing his name has, in its early years, directed a relatively small share of its revenue to direct charitable causes. Each claim, on this reading, is undercut by subsequent evidence. Each narrative is met not with detailed financial explanation, but with further emotion and carefully managed interviews that redirect attention from the numbers back to feelings. Feelings, however, do not satisfy tax authorities. Emotions do not balance a ledger. Trauma, however genuine and deserving of compassion, does not exempt an organization from demonstrating that its tax-exempt status is justified by actual public benefit activity. Circulating online material is said to show multiple Delaware accounts engaged in successive interentity transfers. These documents remain unverified by independent mainstream investigation, and no formal IRS finding of irregularity or criminality has been issued. Commentators nevertheless present the material as the one form of evidence that cannot be dissolved by storytelling, media appearances, or additional memoirs. The practical result of the California experiment on the more scathing accounts is a complex paper trail, an online document leak that has exposed the limited charitable output relative to revenue, and sustained public questions about whether the foundation has functioned more as a brand support vehicle than as a pure public charity. If this is modern philanthropy, the argument runs, earlier generations of less scrupulous operators might regret not having discovered Delaware first. A psychological dimension is frequently added. Prince Harry grew up inside an institution that, whatever its historical shortcomings, subjects its principal public funds, the sovereign grant, the Duchy of Lancaster, the Duchy of Cornwall, to National Audit Office examination, parliamentary scrutiny, and detailed public publication. In London, proposals involving private or semi-private expenditure are filtered through civil servants whose role is to identify legal limits, political risks, and conflicts of interest. Harry has described that system in his memoir as stifling. He sought freedom, agility, and the ability to act without constant explanation. In the United States, he assembled a team of brand and tax advisors and established the corporate architecture of his philanthropic work in Delaware rather than in California, where he lives. California subjects public benefit corporations to active oversight by the state attorney general's charitable trust section. Delaware permits rapid formation of multiple entities at a shared registered agent address with minimal public disclosure of beneficial ownership. Critics argue that the choice maximized opacity at precisely the moment Harry claimed to be seeking greater authenticity and accountability. In documented fact, Archewell, now Archewell Philanthropies, remains a registered 501c3 organization that continues to file public Form 990 returns. Early year grant ratios were low relative to revenue. 2024 filings showed higher expenses than income, a deficit, substantial staff reductions, and a shift toward a fiscal sponsor model. Delaware incorporation is commonplace among American nonprofits and corporations and is not inherently improper. No authenticated internal documents detailing 13 bank accounts or systematic layering have been published by credible outlets, and no confirmed IRS criminal investigation or finding of private inurement has been established. The couple are in the process of returning privately to Britain with their children. Legitimate questions about the Foundation's financial efficiency, transparency, and governance remain open. The more dramatic claims of an active federal probe and deliberate fraud architecture remain unverified. Critics argue that Harry believed he was outsmarting institutional constraints. In their view, he simply exchanged the disciplined financial oversight of the British Crown for the greater legal exposure that can accompany lightly regulated American corporate structures, apparently without recognizing that when one stops listening to the advisors whose role is to keep a public figure out of difficulty, one eventually encounters the authorities whose role is to examine the consequences in a courtroom. Attention then turns to the material said to have precipitated the current scrutiny. When a charity maintains 13 distinct bank accounts, two broad explanations are commonly offered. The first is that the organization is a large, multi-billion-dollar global body, such as the Red Cross or UNICEF, managing complex disaster relief operations across dozens of jurisdictions, each with its own currency, legal requirements, and regulatory firewalls. Multiple accounts in such cases serve operational necessity. The second, less charitable explanation advanced by critics of Archewell is that the structure serves opacity rather than operational scale. In documented fact, Archewell, now Archewell Philanthropies, remains a registered 501c3 organization that continues to file public Form 990 returns. Early year grant ratios were low relative to revenue. 2024 filings showed higher expenses than income, a deficit, staff reductions, and a shift toward a fiscal sponsor model. Delaware incorporation is commonplace among American nonprofits and corporations and is not inherently improper. No authenticated internal documents detailing 13 bank accounts or systematic layering have been published by credible investigative outlets, and no confirmed IRS criminal investigation or finding of private inurement has been established. The couple are in the process of returning privately to Britain with their children. Legitimate questions about the Foundation's financial efficiency, transparency, and governance remain open. The more dramatic claims of an active federal probe and deliberate fraud architecture remain unverified.